Hey, taxpayers, first and foremost, hope your year is starting off great and... Uh-oh, it's my boss. I gotta take this. Hello? Yeah, I'm just talking to the nice, friendly people of the internet. What's up? Really? Alright, thanks. I just got called in over the weekend. I had tickets to go see the Insane Clown Posse. Well, I guess we could talk about income taxes and overtime because there's some misconceptions that we can clear up. Specifically, there are two that I want to talk about. The first one being that overtime is actually taxed more than what the overtime is worth. And let's just go ahead and just completely shoot that down because that can't be true at all in today's tax structure. You see, I have this video here that talks about the computation of taxes using toilet paper, but what we need to realize is that your marginal tax rate is never going to be more than 100%. And when I'm talking about the marginal tax rate, I'm not talking about just federal income taxes. Let's add in state income taxes, maybe potentially self-employment taxes. Again, the sum of all these hits is never going to be greater than 100%. So there's not going to be a situation where you earn $1 of overtime, but you have to end up paying more than $1 in taxes on that same money. Again, there's not going to be a situation where you are working harder, but you end up paying more than what you would have been if you didn't do anything at all. Again, this is not how taxes work at all. Regardless of how you feel about how the government trying to come out and get you, that's just not how, again, our current system is set up. And again, that is a complete fallacy. But I will go off on a little bit of a tangent here because if you are a proponent of the flat tax, well, I have this video here that actually needs a nice little update because it's dated and I know I got better equipment. So again, this probably needs a little bit of a refresher. But one of the things I do in that video is go over scenarios about why the flat tax probably wouldn't work in the different scenarios of how people interpret a flat tax. Well, in one of the scenarios, I think it's either B or C, we talk about what is created as like a void area, which means that there very well could be a potential where you do make more money, but you end up paying more in taxes. So at that point, there becomes a disincentive to work more because, again, at that point, you actually come out worse off. But again, that's a hypothetical flat tax situation that I have in that video. But again, when it comes to just us and our current system with overtime, that's just not how it works. So again, you are always going to come out ahead financially by, again, working overtime. Now, the second misconception is kind of along the same lines, but it's just not as extreme. And that is that overtime is taxed more. And technically, no, it's not. But again, we'll kind of get into some scenarios where there might be some confusion on it. But yeah, what you need to realize is that no, overtime is not taxed more than your regular pay. And to highlight this, let's do a little bit of a pop quiz. See, I'm going to introduce you to 3 of my clients. Now, because of confidentiality, I can't give their names, but we'll just call them, well, A, B, and C. Now, here's the interesting thing about A, B, and C here. They all make $100,000. But the way they make that $100,000 is completely different. You see, A here works full-time, making $48.08 an hour. And again, they work full-time and not a smidge of overtime, which means they work 40 hours a week. 40 hours times 52 comes out to 2,080 hours. Now, that hourly wage may look a little odd, but keep in mind that's actually very specific because if we take that hourly wage times 2,080 hours, that comes out to $100,000. So that's how person A makes their $100,000. Person B, on the other hand, their base rate is $20 an hour. Now, they work real full-time because not only do they fill out the entire 40 hours a week at 52 hours, so again, there's their 2,080 hours, but they work so much overtime, and I already did the math, that the extra $30 an hour of overtime pay actually comes out to $100,000. So their $20 times 2,080 hours plus their $30 overtime rate times the amount of hours that they work at overtime, the sum of those products also comes out to $100,000. Now, C, on the other hand, is an exempt employee. Exempt just means that their salary, so whether that $100,000 is based on job negotiations or a contract or whatever, they get paid $100,000. And since they are exempt, they probably don't even fill out a time card. So we have no idea how many hours they worked. So person C here may or may not have worked more or less than person A. But again, since exempt employees usually don't do anything with time cards, we probably don't even know. So here's the quiz. Which of these 3 workers paid more in income tax? Well, if you said specifically any of them, well, I'm sorry, they all pay the same amount. Again, it's regardless of how much they actually worked. As long as they made $100,000 in income, specifically, again, for as employment, it doesn't matter how you made it. Whether it was straight hours, overtime, or salary, it's all taxed the same way. So again, in the end, each of these are going to pay the same amount of income tax. Now, keep in mind, I'm just talking about the income tax portion of this. I'm not talking about who would you rather be. Because if the question was, Would you rather be worker A, B, or C? I don't think a single soul would choose person B because let's see, if we take the 2,080 hours at the normal rate plus the 1,900 plus hours that they worked at the overtime rate, that comes out to roughly 4,000 hours. Take that divided by 365 days of the year. That's probably around 11 hours a day, no time off. You got to work 11 hours every single day for the entire year. I don't think anyone's going to choose that. So again, I'm not asking which would you rather be, because again, no one would choose B. But again, from an income tax perspective, there is no difference between any of these three. Now, to highlight this further, let's assume that we are in payroll for this company. Again, we hire A, B, and C. We know that we paid them all $100,000 during the year, but now it comes time to file out their W-2. So, all right, here it is. Here's a picture of a W-2, and here's what the thing is. The $100,000 that each of these individuals made is going to show up there in box 1. And again, as you can see, the box 1 is just a sum. It's just a single number. It doesn't tell us the differentiation between, okay, was this money salary? Was this overtime? Was this base pay? It doesn't tell us. It just says, in this case, $100,000. So from a W-2 perspective, we have no discerning way to allocate, okay, what kind of hours were worked. As long as they made $100,000, that's what shows up on the W-2. So again, there is no distinction between the two types of hours or salary and when it comes to their gross pay. And this is really important because when it comes time to actually file their tax return, that amount that's going to be there in box 1 of the W-2 is actually going to flow to box 1A of the 1040, which is shown here. So again, this is what's actually filed with their taxes. And again, box 1A is going to be simply just the sum of all their W-2 box 1As. And well, again, let's assume that workers A, B, and C, that's the only income they had. They didn't have side hustles or anything. That's just strictly what they made. So that 100,000 is what's going to show up in box 1A of their W-2. Again, there's no distinction between how they earn the income. So because of that, we don't know how much of it's overtime. We don't know if it's salary. We just don't know. Now you might be saying, but Trey, hold on a second. We can look at their pay stubs and that would tell us. And you're exactly right. Pay stubs would tell us. But keep in mind, we don't file taxes based on pay stubs. Or if we do, I'm sorry, it's just not how it's done. We have to wait for a W-2 because, again, that's usually the official document because that's what goes to the IRS. And since the W-2 doesn't actually tell us the distinction, how can we tax it if there is, again, no distinction on the official paperwork? So behind the scenes, what happens if each of these people, again, A, B, and C, they file their tax return, box 1A here is going to say $100,000, and that $100,000 just flows through the rest of the tax return. So again, they'll take out their standard deduction most likely. But again, just to kind of make the math more sense, let's say they didn't have any type of deductions. They all had the same, playing field. None of them had kids. They're all single. So again, their standard deduction is $14,600. That gets removed from the $100,000. Then they calculate the tax. So each of them are all going to have the same tax liability. Again, it doesn't matter how they made $100,000. So again, person A had an hourly rate that just happened to match up to $100,000 once you worked full time. That person never worked, an hour of overtime at all. But person B, on the other hand, obviously worked like crazy because they almost worked 11 hours a day every single day for the year and still made the same amount as person A and person B while working probably potentially hundreds of hours, thousands of hours more. But at the end of the day, the tax return has no distinction between what hours are normal versus overtime. And because of that, we can't apply different tax rates because, again, we don't know the allocation. If we don't know the allocation, we can't do the math. Now that President Trump is now, president, you've probably heard him talk about potentially exempting overtime from taxes, which sounds great. Person B would be all for that. I mean, gosh, that'd be a nice little pay bump, right? But there's an issue with that. Well, I guess not really much of an issue, but we need to look at the original W-2 and we would need to transform it in order to, again, distinct between what is overtime versus regular hours. Because again, our current documentation and return process doesn't distinct. So again, if we do want to start exempting overtime, we need to start changing the W-2s and the paperwork in order to identify the differences between the two. Because again, what we currently have doesn't do it. Hey, but Trey, you're lying. You're wrong. I know they charge more tax on overtime because I can prove it. Here, look at my pay stub. And well, if I don't work overtime, they usually withhold 10%. Now that I'm looking at my pay stub for when I've worked a bunch of overtime, if I take federal withholding divided by my gross income for that period, that's 15%. So obviously they're charging more taxes for overtime. And chances are You are correct. But again, that's just withholding taxes. Withholding taxes has no bearing on reality of what your actual tax liability is. You see, if we go back to our three friends here, even though they all made the same amount of money through different means, their tax liability is all the same. But their withholdings could be vastly different. So again, withholding taxes is just your estimated payments throughout the year. And very well, depending on how your payroll is set up, your overtime payments could be withheld at a higher rate than normal. And that's okay. The biggest thing that we want to make sure on is that that higher rate, or actually it doesn't even have to be the higher rate, just whatever withholding rate that they're withholding on your overtime is at least your marginal tax rate. If that's the case, then we're covered, because that means that you are going to be making more, again, through overtime. But is your taxes going to be worse off? Well, probably not, because if they're withholding at least your marginal tax rate for those overtime wages, then your refund will either stay the same or increase, or the amount that you owe will either decrease or, again, hold steady, which, again, is kind of the name of the game. We don't want to work more and more overtime with our tax liability starting to creep up or a refund dropping. Because if that's the case, that means that your withholding rate for your overtime was not as high as it needed to be. Now, if I lost you from all that ranting I was just doing, don't feel bad, because as I was projecting, I realized I don't know if I'm making a whole lot of sense. So let's introduce you to our next friend. You see, this is Dee, and Dee's very special because, well, she's single. So when she files her taxes, she's going to file as single, and that's going to come into play here. But just like with worker A that we met earlier, she works just enough full-time hours to, well, be a full-time employee, but she doesn't work an ounce of overtime. But her hourly wage is $29.69. And that's very, very important. I'll get into an example why. So if we take that hourly wage times 2,080 hours, which again is full-time hours, no overtime, that comes out to $61,750 of gross wages. So again, that $61,750 is what's going to show up on the W-2, which is going to go to the 1040. But again, she's filing as single. We're not going to take any above the line deductions. We're not going to itemize. We're just going to take the standard deduction just for example's sakes. That's $14,600. If we subtract that out, that comes out to $47,150 in terms of taxable income. So if we take that taxable income when we look at the tax tables, we come out to $5,426 of actual tax liability. Now, if her withholdings was actually dead on dollar for dollar and she was paid bi-weekly, her federal tax withholding should have come out to about just under $209 per paycheck, which means that if her withholdings was greater than that throughout the year, then she's almost guaranteed a tax refund or getting her change back. Likewise, the exact opposites are true. If she was only withholding, let's say, $190 throughout the year per paycheck, and she was supposed to withhold $209, then when she does her taxes, she's going to owe more. So regardless of the withholdings that, employee D here was making, it doesn't matter. Again, her tax liability was still that $5,426. Doesn't matter if her withholdings was really, really high or really, really low, because withholdings has no bearing on that calculation. But here is the exception that I want us to get, because again, the whole concept of this video was letting you know that no, overtime is not taxed differently, because, well, we've learned that, well, it shows up on the W-2 and the 1040 as a combination of all of your wages. So the only way to exempt overtime from taxes is to completely change the W-2 and the 1040 to, again, reallocate how those are being taxed, which in this case currently is together. So there is no separate tax rate for overtime. Again, it's all taxed the same way. But again, we just talked about withholding taxes is different because, again, you very well could be working more overtime and they're withholding more taxes. But again, withholdings has no effect on what your actual tax liability is. Again, just like with Lady D here, it doesn't matter how much she had withheld on her bi-weekly paychecks. Her tax liability is still $5,426. But here's the situation where overtime may actually be taxed more. And this is why this $29.69 is extremely important for a single person. Because again, if we had no other deductions and credits, her taxable income is that $47,150. That dollar amount is actually at the very tip. It's actually the last dollar in the 12% tax bracket, meaning that once Lady D here makes even a single dollar more, it is now entered the 22% tax bracket, which means that her withholdings needs to jump up to compensate. So to put this in perspective, let's say hypothetically she worked 2,081 hours throughout the entire year. 2,080 of it was at her standard rate, and she only worked 1 hour of overtime the entire year. Now, to make the math easy, her hourly rate is just under $30. So $30 times and a half. Okay, that's $45 an hour. So again, she's going to be making $45 an hour every time she's working an hour of overtime. But her withholdings now, her income is now in the 22% tax bracket, meaning for every hour of overtime she works or every dollar she makes, whatever you want to think of it, needs to be withheld at 22%. So, in hypothetical stance, if her withholdings are only at 15%, so for every hour of overtime she works, she's making $45, but her withholdings is only 15%, then there's a gap here because it's supposed to be 22%. But if it's only at 15%, well, there's a gap. So again, the more and more she makes, the more and more overtime she, it starts to accumulate. That gap grows bigger. So again, that's something to be worried about because in this situation, yes, working overtime does make you pay more taxes because it did push you into a higher tax bracket. So in this case, she was at 12%, but now she's at the 22% tax bracket. So now those new overtime dollars needs to be withheld at 22% because the 12% withholding, or again, that tax rate is no longer applicable. You're now bumped up to the next bracket. In conclusion, is overtime taxed more? No, it's not. Now, we just learned about here situation D here, where overtime puts you in a new tax bracket. So we can kind of say that if we want to. We also talked about withholdings, maybe potentially more. But again, that's not really taxed. That's just withholding. That's his estimated payments. But again, when it comes down to your actual tax liability, there is no distinction between overtime wages and your normal wages. So no, overtime is not taxed more. But tax laws can change very quickly because we now have a new president who's actually even talked about exempting overtime from taxes. And if that's the case, that's great. I mean, remember our person B who worked 11 hours a day every single day for a year? I mean, heck, he's gonna love that law. I mean, he'll be making bank, but at the expense of his mental health. So again, I don't think people are gonna be too envious of him. Again, there comes a point where the money's just not worth it. But again, for small overtime here and there, heck, that's gonna be great. But no, at the end of the day, overtime is not taxed differently than anything else. And if it were to, again, W-2s we're gonna have to change because that way we have to have that distinction between what the hours are. Because our current system just adds them together. And well, if there's no distinction, we can't do the math between the two. So no, overtime is not taxed differently. So hope that helps.